Yes, that's correct. Equity market is down right now. Same was the case in Feb March 2023 too. This is another such opportunity to use your investment losses to save a lot of income tax. Not just this year, but in future years too. Let's see how. First of all, go through your investment portfolio and identify those shares and mutual funds which are in losses. Sell all the holdings which are in losses right now. Categorize the losses into short term and long term. For listed equity shares, ETF, equity mutual fund, holdings sold within 1 year is short term. For unlisted equity shares and foreign equity shares, holdings sold within 2 years is short term. Debt mutual fund won't be in loss right now, so forget it. Hybrid mutual fund with equity portion between 35 to 65% will be short term if sold within 2 years. Hybrid mutual fund having equity portion less than 35% and purchased before 23rd July 2024 will also be short term if sold within 2 years. Hybrid mutual fund purchased after 23rd July 2024 will anyway be a short term because it's less than a year. So while filing the income tax return for this FY 24-25, you can set off these losses against other capital gain income of current year FY 24-25. Under Section 70, short-term capital loss can be set off against both short-term and long-term capital gain. But a long-term capital loss can be set off only against long-term capital gain, not the short-term one. As per Section 71, a capital loss cannot be set off against any other income like business income, professional income, dividend, interest, house rent, salary, etc. So take care of that. So now, if you do not have any capital gain income during this year, then under Section 74, you can carry forward these losses to the next year up to 8 subsequent years and can set off the losses from future capital gains income in those years. So for example, you incur 3 lakh of capital losses this year and you have capital gain income of only 1 lakh this year, then you can set off that 1 lakh, pay no taxes on that capital gain income, carry forward the extra 2 lakh losses to next year. And next year, if you have say 3 lakh of capital gain income, set off this 2 lakh which you carry forward and then calculate tax only on that additional 1 lakh of capital gain. So the benefit runs into future years as well. Yes, so this way you can avoid or reduce paying capital gain taxes during the year or future. Remember that carry forward and set off facility is available only if you file the income tax return within the due date for the FY in which such losses are incurred. And due date is usually 31st July for individuals. You all know that. The last and main thing, what to do with the amount you have after selling the investment in losses? Simple. Immediately the next working day after selling, you can reinvest the entire amount in the same mutual fund or shares if you still find those attractive, or invest in some other shares or mutual fund scheme, or in any other product like gold ETF, silver ETF, whichever you like. The choice is completely yours. The reinvestment does not impact set off or carry forward of losses in any manner. Now, this whole process of selling the investment which are in losses to set off against capital gain income to save taxes is called tax loss harvesting. It is perfectly legal way of investment and tax planning and widely used and practiced by everyone who know about these. For more such useful information, subscribe to my YouTube channel Happiness Mitra and follow on my social media accounts, and please share this video with your contacts. Thanks for your time and attention.